Hello, ladies and gentlemen, Greg McCloskey from ForexLive.com. This is a Forex quick look. I'm going to take a look at the dollar versus Canada. Today's date, November 1st. It's also Friday. On Friday, I like to take a look at the currency pairs, not only from the perspective for today, but also for the coming week. What did we do this week, and what do we have to look forward to next week? That's what I'm going to go through in this video, so let's get started. I'm going to start by taking a look at the 4-hour chart. And if you take a look at this high price going back to August of 2024, this is the high price for the year. And in this week's trading, we came up to that high price for the year and found willing sellers against that level. We also found willing sellers later in the week, in fact, today, ahead of that level, and the price rotated to the downside. So right off the bat, we know that the 1.39458 is going to be a key resistance on the top side going into next week. Well, even today, if we do break above that level, that would open the door for further upside momentum. Now, where does that stand in relation to the daily chart? And if we look at the daily chart, this is that high price from August. We go back in time. That's the highest price going back to this point right here. This point right here was the high price from 2022, and it came in at 1.3977. So now we have another piece to the puzzle. If we break above the 1.39458, the next target would be 1.3977. And if we go back in time, this level was the highest level going back to this point right here, which is May of 2022. So we'd be trading at a 4+ year high if we're able to get above the 1.3977 level. So that opens the door for further upside. That's our look at the upside for the dollar versus Canada going into next trading week. What we know is this week we so far have held the 2024 almost to the pip. So that's going to be a key level going into next week. Now, let's take this down from the daily chart and move all the way down to from the 4-hour chart and move down to the hourly chart, because this is going to help define our shorter term levels on the downside that would need to be broken in order to increase the bearish bias. The one thing that you can notice from this chart is that going all the way back to this point in September, the price has been trending to the upside. That's a big, huge move from 134.198 up to 139.458 in the matter of 1.5 months or sometime a little bit less than that. So big, huge move to the upside in the dollar versus Canada. The buyers are in control. Along the way, we did have moments where we broke below the 100-hour moving average. We did it there, we did it here, we did it here, and we did it here. And including today, we fell below the 100-hour moving average. As time goes by, that 100-hour moving average becomes a easier hurdle to get below, to, and through. But each of the time the price moved below these levels, we couldn't sustain the momentum. In fact, once we moved back above those levels, we started to use the level as support, like we did here, 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 and we moved to the upside, like we did here and here, and moved to the upside here and here, like we did in trading yesterday, where we held support and moved to the upside. Now we broke below this level, and then we are trying to stay above that level, that 100-hour moving average at 1.39112. If the price can stay above that level, that's more bullish, and we would look for a break of the 139.45. Eventually, if we move back below the 100-hour moving average, however, and we see further momentum to the downside, what I want to point out as a key level, not only today, but going forward into next week's trading, is that the 200-hour moving average, this green line right here at 1.3979 and moving higher, has not been broken since this point right here, the day when the 100 and 200 hour moving averages converged before the price moved to the upside. So that is going to be our key level to get to and through in trading next week. The level comes in at 1.3879. Move below that level, and we'll start to talk about further downside momentum in the dollar versus Canada. Until then, are the buyers, are the sellers winning? The answer is no, unequivocally no. But if it is broken, we do have levels that we can outline as next target levels, including the rising 100 bar moving average on the 4-hour chart. That comes in at 1.3832 in this swing area right here. And then we go down to the low price that we saw here, and high prices that we saw here and here. That level comes in at 1.3813. Those would be targets on the downside. So there you have it. A detailed look at not only the upside and the bullish bias targets for the dollar versus Canada, but also the downside, what needs to be done to give the sellers some confidence, some control. Until that can happen, they're not in control. The buyers remain in control. My name is Greg McCloskey. Good fortune with your trading. Bye-bye now.